median house price. Now in August, the national median house price is up to $380,000, up $30,000 nationally in just 1 month, ladies and gentlemen. And so we're up over 19.6% pre-pandemic numbers. Okay, so last year we were in pandemic. Okay, and so we're up by 9% from last year at this exact same time, but we're up over 19.6%, ladies and gentlemen, almost 20% on our median home price pre-pandemic. Okay, and so where we were in 2019 before the pandemic actually got released, right, where our governmental and political induced recession actually happened, because that's what it was. It was a national political and government released pandemic. It was a nationally and public released recession that happened, our world's shortest recession, but it was stimulated through the close downs through our governmental agencies and stimulating the housing market. So listings are down by 25.8% nationally from pre-pandemic. So the amount of homes on the market, we're still less, almost 26% of where we should be compared to the average home listing pre-pandemic. Now, we are up by 4.3% to where we were this time last year. So we are making migrations up, but they're very slow. We're still 25.8% lower than we were pre-pandemic. Now, the average home, ladies and gentlemen, is on the market for 39 days right now, compared to last year at 56 days, pre-pandemic 63 days. So we were already in a really good market pre-pandemic. And now we're starting to see the amount of days, the quantity of days that the houses are on the market are still going down even lower. And so 39 days, what does this mean for everybody? And so I sit back and I compare it to what we're doing. And are we looking at having a global recession, a national recession, a local recession? How does this affect us? And so I go in, I look at all these numbers because, one, they're important to me. I'm investing in different cities across the United States. I get concerned with market sectors, right? So like one of the things, I'll give you an example. Ty Lopez and I have a subdivision, not a subdivision, we have a couple big mansions that we're building in Puerto Rico. Well, what markets can you go in and say, hey, I'm going to build a mansion and I'm going to make a profit, right? And you feel comfortable about it. Most of the time, it's the super ultra wealthy people go in and say, hey, I'm going to build me a mansion and this is where I'm going to live. But as a business model, there's very few business models that you can exercise where you say, hey, I'm going to go in and build a mega mansion and sell it for a massive profit. And so we're doing that. But Puerto Rico is one of those unique markets that we're in, and depending on the government's ability to keep the tax benefits that are in Puerto Rico, we'll see if this is sustainable. So we sit back, we acquire in any market as much real estate as we can. And the reason I tell you that I'm in Puerto Rico is because I challenge you to go into that market and try to do what we're doing. It's very complicated because it's a different market. Plus, there's not a lot of inventory there, and the prices have already started to see their inflation at extraordinary abundance, right? So pre-pandemic, the largest sales acquisition price on a house in Puerto Rico was just shy of $19 million, okay, of all times. No house had ever sold for in excess of $19 million pre-pandemic, at least it's recorded, right? That through a title company or through an agency that can be verified. So the largest acquisition price on any mansion in Puerto Rico pre-pandemic, $19 million. Ladies and gentlemen, just go to the multiple listings in Puerto Rico right now, and you'll find nothing but $19 million, $20 million, $25 million, $30 million homes all over the place, and they're selling. And so we went in, we started picking up land. And so we buy a piece of land, it's worth $2 million. And now today we're relisting that land for $5 million. Double 100% return on our investment. Now, has it sold? It hasn't sold, but there's people listing lots in the same area for $7 million. So we sit back and go, okay, we can exercise this market and we can build a house, right? We can go in, we can build a house. We build a house in the early part of the pandemic. We signed a contract, $7.6 million to build an 8,800 square foot house golf course views, ocean views in this one specific area that we're building. Now we're going in, and the house values, we were modeling this to be able to sell it at about $11.5 to $12 million. Ladies and gentlemen, the acquisition price for those same homes now are in excess of $16 million. So we're about 2 months away from finished completion of one of the first homes. We acquired a second lot at the same time, and we sit back and go, do we build or do we sell? Now, here's the thing. You have to base everything based on risk. And so when we go into this market, I sit back and say, okay, we started this house in December of 2020. Okay, so we look at that and I say, okay, we're going to finish this house in December or January of 2021. So we have a 13 to 14 month build. Now, we cannot start the next home because the contractor that we're using, he's utilizing all the concrete guys to finish the house that we're working on. And so when they're done with that house in 2 months from now, then we can move them over to the new house. So the earliest we can start on that house is December or late November. So we know that we cannot finish that house till January or February of 2023. So we don't know governmentally what's going to happen in that period of time. And so we sit back and do we roll the dice and try to make $7.5 to $8 million profit? Or do we sell a piece of land that we bought for 100% profit and make $2 million? And so everything is based on risk versus reward. We could get very bold and do that, but what we've decided to do is say, hey, let's list the lot. If it sells for the $5 million, we still made 100% return on our investment. Very, very, very lucrative. We're extremely happy. Or do we take the risk and try to shoot for $8 million? And that's the risk that you take, right? So I look at these markets, I see their up and coming trends, and then I like to introduce to you guys the markets that have inflated the most. Why? Because if what comes up, you ever heard that whatever comes up must come down? Well, ladies and gentlemen, when you see stimulated markets like this, I want to start with the top 5 markets, and I want to talk to you guys about this because these are the 5 markets that, ladies and gentlemen, I withdraw from investing in specifically because I don't want to be stuck in those markets when things go south, okay? So the 5 most inflated markets right now: do you sell, do you buy, or do you rent? If you're living in these markets, my suggestions to young professionals right now is to rent, is to lease. Here's why. We're seeing right now inflations in real estate markets nationwide. But if you happen to be in the Detroit, Michigan area, that's the number 5 most inflated market right now. Number 5. We're going to do this backwards. Detroit, Michigan is overvalued right now by 46%, ladies and gentlemen, up over 21% from pre-pandemic numbers. The average median home is still below the national average, but it's still creeping on $300,000. National average is $380,000 for a median home. Now, what does Detroit have to offer? Now, as I remember Detroit, when the automobile industry left there, and they've been in financial distress economically for the last decade plus, for the last 2 decades really. Our big American auto builders were all in that Detroit market. And now they've dissipated out. What is controlling that growth? What industry is allowing that to continue to go? Economics, ladies and gentlemen, economics win. And I always say numbers never lie. And so what feeds that growth and what's going to hold and stabilize that growth long term? Is there enough industry in Detroit, Michigan? See, if I Google Detroit, Michigan right now, and I see what their industry is, let's do it. Let's do it together, ladies and gentlemen. What is the largest economic industry in Detroit, Michigan?
According to the Perna team, automobile manufacturing continues to reign as the top industry in Detroit. Despite having lost nearly 40% of its manufacturing jobs in the 1980s, the automotive industry remains the top economic driver for the city.
Okay, there you go, ladies and gentlemen. It's still down 40%. And the automobile industry is still the driving factor of economics, that in schools, universities. So, ladies and gentlemen, if universities through the whole pandemic have been shut down, they're going virtual, universities are not doing as well as they had once done, and we have the automobile industry still down by 40%. Is that a market that I'm going to encourage you guys to go build and develop in? Is that a market that I'm going to encourage you guys to go buy homes in? go buy rooftops. Ladies and gentlemen, it's not. It's in the top 5 most inflated markets nationwide. And so I encourage people, I'm not investing in that market. I have plenty of plans of investing in that market, but I'm cautioning you guys from some of these markets. Now, we look at Utah. Utah, I love. There's a lot of, there's a lot of entrepreneurial spirit in Utah. It's highly, it has a high number of Mormon religious-based population there, and the Mormon population is shown to be very entrepreneurial-like, and they have a lot of entrepreneurial spirit in there, where there's a lot of industry in that regards. But ladies and gentlemen, Provo, Utah is up by 46% pre-pandemic numbers, 46%, ladies and gentlemen, and that's up 24.8%. The median price per home is up 46%. And the market since last year is up 24.8%. The average median home in Provo, Utah right now, ladies and gentlemen, $410,000. And so it's over the national average by over $30,000 per rooftop. And if you sit back and you really think about Provo, Utah, and you think about how entrepreneurial spirited the Mormons are, what other industries they have? They have some of the highest number of direct sales and network marketing, multi-level marketing companies. Kroger Brands is from there, big grocery chain, #1 grocery chain in the world. But that's distributed across the Midwest, Southwest region, right? So we sit back and I go, okay, what else does Provo have as far as industry, and is it growing? That's the question. Now, the third one, most inflated market, is Ogden, Utah, probably about, an hour and a half from Provo, up 49.7%, ladies and gentlemen. That's an increase of 26.4% from this time last year. But then the median home price is up 49.7%. And the median home price in Ogden, Utah, $350,000. Now, ladies and gentlemen, I know where Ogden, Utah is. I'm a big skier. I drive through Utah. But how many people watching this video, comment below, have ever heard of Ogden, Utah before today? And if you haven't, comment below and let us know. And if you know an industry in Ogden that's stimulating their economics there that I'm unaware of, please also put that in the chat, because I'd like to know what's stimulating the growth to be able to support a 49.7% increase in the average median home price, ladies and gentlemen, because I'm not aware of it. And I just want to know. Look, ladies and gentlemen, if you find this information helpful, comment below. Click and subscribe and give us a thumbs up. Let us know that you appreciate this information. We're about to enter into the top 2 most inflated housing markets nationwide. You want to hear these 2 inflated housing markets? Give me a thumbs up. Subscribe to our YouTube channel and let us know that you're alive and you love this information. Ladies and gentlemen, the number 2 most inflated market in the nation, Austin, Texas. Now, I love Texas. I do. I got to say, I love Texas. I lived in that market. I had a house over in Largo Vista on the backside of Lake Travis. Used to tell people, ladies, I'm 10 minutes from downtown Austin if I take a boat, and I'm 45 minutes if I have to drive around. And ladies and gentlemen, I love Austin. I lived in San Antonio for a lot of years. I made a lot of money in that area, and so I have a heart space, and I still have good close friends. In fact, one of my closest friends is like my brother, still lives real near that market. And so, ladies and gentlemen, I look at Austin and I pull away from it, because I sit back and I go, man, how much more can they continue to grow? Now, there is a lot of economic growth there. Can't argue that, can't dispute that. I think that Austin is a great market. It's up, ladies and gentlemen, over 50.72%. 50.72% of its average median house price. The average median home is in excess of $575,000. Now, ladies and gentlemen, this is Texas. Texas has one of the most solid economies in the country. One of the wealthiest economies in the world. Individually, if it was its own country. Now, I sit back and I go, why? If Texas has always prided itself for affordable housing, which it is, you go just an hour and a half down the road down to San Antonio, you go up north, you go up a few hours up to Dallas, Fort Worth. Ladies and gentlemen, you can get a lot of house for a little bit of money compared to what you get nationwide. And that is what's so attractive about living in Texas. But Austin, ladies and gentlemen, up 50.72%, median home prices in excess of $500,000. How much more room is there to grow in that market is the question. So as much as I love Texas, as much as I love Austin, I sit back and say, you know what? If I love Texas, I need to go to Dallas. I need to go to West Texas, to El Paso. I need to go to San Antonio. I need to go to Houston. But I don't know about that Austin market, ladies and gentlemen. When I see numbers inflated that high, it's scary. But here's what's even scarier, ladies and gentlemen, is it when we look at the #1 most inflated market nationwide. And I'll tell you, this one flabbergastes me, because I sit back, and even when I've been hearing about this market for so many number of months here, for going on a year and a half. And I get it, ladies and gentlemen. California, people are moving out, but are they really? I'm building and developing in areas in California, and and we're seeing a huge migration in the California markets. Now, you don't see prices increasing in great markets like California like this. You're not seeing prices double, going up 50%, 80% in markets like California. You're not seeing markets like that in Arizona. But ladies and gentlemen, in Boise, Idaho, ladies and gentlemen, the #1 most inflated market nationwide, Boise. I go and buy work trucks out there. I drive out of there, and all I see is farmland. Our potato capital of the country or the world, in Boise, Idaho, ladies and gentlemen, it is up by 80.64% on its median home price. The median home price in Boise, ladies and gentlemen, is $523,000, over $500,000, up 80% on the median home price. I don't get it. And I sit back and I scratch my head and I go, you know what? I don't care how much growth is happening in Boise. You won't find Jerome Maldonado or any entity I'm associated with in Boise, Idaho. It's beautiful. I'm not going to sell you guys against Boise. Great place to live. But what's stimulating the economics in Boise to support an 81% growth in median home prices? That's the question. Let me know. Comment below and let me know if you know what is stimulating that growth. Now, I got good friends in those areas, and they love it because it's a great place to raise a family. But how do you feed your family is the question. How do you feed your family? You're a young professional, you're a young millennial, and you're going out and you're going to spend money investing in real estate in Boise, Idaho. Ladies and gentlemen, what do you do economically? And is there enough of it for the masses? I went and picked up some work trucks up there. I had the worst experience up there that I'd ever had. And I'll tell you guys, I loved this dealership prior to buying from them. Pre-pandemic, they did a great job. But there's no cars on the lots. Everything's empty. And things are just crazy up there right now. And so even the sales guys are starving. And hence, I had a really bad experience because they had really poor salespeople because they can't keep them employed because of the fact that there's nothing to sell on the lots. With the pandemic, they're not getting computer chips fast enough, and there's no vehicles on the lots, especially the heavy duty pickup trucks that we buy and we utilize. And so I sit back, I scratch my head, I look at that, and I go, really, is there that much economic growth in Boise that it's going to support an 81% increase in median home prices? And now I will tell you when I will look at Boise, the next economic correction, I will look down in Boise, and I'll tell you why. Because if they can't sustain that growth economically, they can't support that growth long term. And so Boise, ladies and gentlemen, may be a market that you hear me talk about again. When the prices go back down, and it's a market where you can go in and pick up real estate for super cheap, inexpensive prices. Now, I don't know when that's coming. I don't have a crystal ball, and I wish I did. But ladies and gentlemen, I wish I would have owned real estate in Boise pre-pandemic. I wish I would have had a crystal ball to sit back and rub and say, pre-pandemic, hey, crystal ball, tell me where to go invest all this money so that I can get the highest appreciation return in the country. And ladies and gentlemen, I would have seen an 80% return on my capital if I would have invested it in Boise 2 years ago. Now, ladies and gentlemen, is the opportunity still there for you? I don't know. If you do invest in there, keep me posted. Let me know how your ride goes. It's not a market that you're going to see Jerome Maldonado associated with in regards to my acquisitions, my LLCs, and what we're doing. All I'm here to tell you guys is the real stats and real numbers of what's happening nationwide and tell you how we invest in certain markets. Now, if you've been following me, I'm not going to sit here and tell you the markets I'm investing in are the best ones, but I'm going to tell you that we're really damn good. And there's other markets that we're looking at tapping into that we have not yet tapped into, and we're going to be moving into over the next 3 years. My acquisition team sits back and they evaluate certain markets, and I go in and do the research and do the underwriting and see if my acquisition team really has their act together and really has supporting documentation that tells me, hey, Jerome, these are markets that we should be looking at. Now, I know one for sure that I'm going to be investing in, and I don't want to give you guys all my information right up here. You know, I can't do that yet. Now, I will unveil that information to you guys in the near future, but we're still market testing. And ladies and gentlemen, we just don't want the large institutional buyers going in the markets that we've done research in and going in and trying to buy around us and inflating prices like they're doing over in Boise, Idaho, and Austin, Texas. And so I'll talk to you guys a little bit more about those markets as the nearing months come. But I'll tell you, ladies and gentlemen, if you are between the ages of 18 years old and 35 years old, and you're sitting back wondering right now, do I buy or do I rent? And you're a young professional starting your life and wondering, do I buy or do I rent? I would sit back and tell you guys right now, if you're going to buy an investment property. And if you're going to buy a place for you to live, don't rent right now. Invest that money into something that's going to compound for you. It's going to generate some wealth for you, and that you guys can stabilize. We can stabilize this increase in evaluations. Don't buy a house right now. Not for you. Not for your family. Put yourself someplace. Rent a house. Rent an apartment. Put your family in a nice, safe, good neighborhood. But invest right now. Right now is a good market to invest. Just not in those 5 markets I gave you, but everywhere else, ladies and gentlemen, affordable housing is where it's at. I'm telling you, affordable housing is where it's at. You're going to hear me preach about this at Real Estate Domination 2021. I'm going to bring you guys some real stats, real information. I'm going to unveil my exact business plan, what we're doing. I know I talk about it, but I'm going to unveil it to you in Real Estate Domination 2021. And I'm going to explain to you guys, I only get 2 hours up on stage in my own event. So I'm going to take advantage of that 2 hours. But I got other people on there that you're going to want to hear, because you're going to want to hear their business model. And all these people have supporting businesses that are doing exactly what we're doing. So it's going to help stimulate more opportunity in the exact same thing that I'm talking about, or I wouldn't have these people talking at the event. And you're going to get a real life understanding of what our business model consists of and why, and how we're actually implementing it. I'm going to break down some real numbers for you guys there and explain to you guys how we do it. And we're going to give it all away, the markets that we're going into. I won't give it away here, but I'll give it away out there. So if you want to know the top 5 markets to be investing in right now, you're going to want to be at Real Estate Domination 2021 on November 5th, 6th, and 7th in Las Vegas, Nevada. We're doing it live from the MGM. It's not just virtual. We are doing it virtual this year. You can log in from the convenience of your home. But if you want to meet with us in person and network with hundreds of professionals and meet people like Ty Lopez, Cody Sperber, the clever investor, the one with the green Lamborghini, he'll be there. I've been talking to Cole Hatter. Cole Hatter asked if he could speak there, talk to you guys about his event Thrive in a few weeks from now, a few weeks after our event. He'll be there, the founder of Thrive. We're going to have Todd Alt. He just hit billionaire status this year, and he's going to be for our Inner Circle members, honoring them with a VIP, an Inner Circle dinner at his expense, charities of the Todd Alt and the Alt team, and to be able to hang out and have dinner with about 30, 40 people and have a billionaire do that for you, priceless. We're going to have 3 of my business partners there explaining to you how we do what we do and the acquisitions that we're taking down and what they're doing right now, like Kyle Mitchell, multifamily genius. We have John Trotman coming in this year, and John, I've been buying properties from him. He's like a heavy hitter wholesaler. He's not doing these $200,000 home wholesale flips. This guy's doing flips, but he's doing multi-million-dollar flips, $10 million flips, $5 million flips. And he's going to show you how he went from the little stuff and scaled to the big stuff, and how he's positioned his company during the pandemic to really drive this business model. So he'll be there. We got, who am I missing? I shouldn't be missing anybody because all of them are incredible. Ty Lopez is going to be there. I already mentioned him, but I'll tell you guys that Ty You know, he's going to talk to you about these luxury brands, how we're doing stuff. We're looking into markets like the French Riviera in Italy right now, which is great. We have the Kwok brothers. These gentlemen in their 20s doing over $4 million a year in business and through their normal day in, day out business. But these guys have went out and have hundreds of units in multifamily. They're going to show you guys how they've done that. The Kwok brothers have been great advocators for me. Great guys. Yeah, we're gonna have Marshall Wilkinson. Marshall, here's what I love about Marshall. He's a no bullshit type of guy. This guy is a no bullshit. He's a New Yorker, and he's a through and through, from skin thick to blood deep. This guy is a New Yorker. And you know what's funny? I drove into New York in 1993. I remember I was in college. I was in college, and I was like heart set on going to New York City for the first time ever. And I drove in with a buddy of mine in his little Hyundai Excel. You remember those little Hyundai Excels, little black Hyundai Excel? And we're over in Maryland. We're in Waldorf, Maryland. His parents own some Allstate agencies, and I was awed by that because my parents owned a house and a car, right? And I love my parents, but they weren't entrepreneurs. And his parents, I told him, I said, I got to get to New York. I want to see it. And he was scared to drive in New York. I said, I'll drive. I took his little Hyundai Excel. I drove into the freeway, and then a big old semi truck comes up about 3 inches from me and boom, right around the Jersey Turnpike and almost wipes me out, right? And I'm like, whoa, this is where you stay center lane. You don't hug those lines in New York City, ladies and gentlemen. And I remember going to the toll booth, and people, I'm like, hey, how are you? Coming from the Southwest. And they're like, 50 cents. And you throw it in the thing, right? And I was thinking, man, these people are rude. And then I was like, and then I started talking to them. And I really got into it. And it was when I moved back out there about a year and a half later into Virginia. And I used to go up to New York to go talk and speak and sell all the time. And then I really got to know some of these New Yorkers. And I was like, damn, I like these people. And you know what I like most about them? Is that they're no bullshit people, right? It doesn't have anything to do with friendliness. I'll tell you guys. I'd rather be told exactly how someone feels and exactly where to go if they don't like you than bullshitted by other people wearing a fake face and wearing their two faces, one on each side of their collar, right? And so one thing I learned to appreciate about New Yorkers is that they're real. And I'll tell you, New York, people from New York, New Jersey, and the Northwest and the Northeast up there made me a shitload of money in direct sales and network marketing when I finally figured out the business. And I'll tell you, Marshall is no exception to that. That gentleman is going to be raw, he's going to be real, and he's going to tell you how a real New Yorker makes money through the means of real estate. He doesn't only just invest in real estate in New York, even though it's one of his primary markets. He's doing things all over. Ladies and gentlemen, we have Antoine Martel. This guy's in his 20s, has multifamily apartments all over the place. This guy went millionaire status in college, ladies and gentlemen, in his early 20s. He's going to talk to you guys about how he's been sending me stuff back and forth to get my approval on what he's talking about. And then we have Ramez Dab, one of my business partners, and David Carvajal. Ramez is going to go over how we're doing what we're doing up in the Northwest. And this guy, I'll tell you, Ramez is one of the smartest people I've ever met in my life. My son loves him. My son's just like, I really like Ramez. He's just really smart, Daddy. And I say, yeah, he sure damn is. He's a smart cat. And he's gonna bring all that smartness to you guys in real estate domination in Las Vegas, Nevada. So if you want to have a good time, you want a no sales event where people aren't selling you a bunch of shit you don't need, and you want to be a part of something great and want to go and network with some real badasses in real estate, well, I'll tell you where to be on November 5th, 6th, and 7th, hands down, Real Estate Domination 2021, Las Vegas, Nevada. And if you're really bold and you really want to network with people, then you need to be my inner circle guest, or one of my, at the very least, one of our VIP guests, so that you can at least have a VIP lunch with us and sit around, hang out with all the other VIP members and get exceptional seating right up front, in front of hundreds of people. And then if you really want to do it, you can spend Sunday morning with us at brunch, and you can have dinner on Todd Hall on Saturday night. Ladies and gentlemen, Real Estate Domination is a no bullshit event. This is real stuff. These aren't speakers. These are real professionals in the industry of real estate, bringing it home, knocking down home runs. Ladies and gentlemen, if you want to hear what's really happening in the market, how we're executing in this market, setting ourselves up for the future, be it Real Estate Domination 2021, and I'll look forward to seeing you guys there. Till then, you guys go out and have a great day and compound your success.